Good evening, everybody. All right, here's a good illustration of why the T line is such an important trend factor. With the Dow closing back below the T line on Friday, that gave us a whole different perspective of what's going on as far as the probabilities between the bulls and the bears. So not only does it close below the T line as your first criteria, but you can also see what it's doing to the trend trajectory. Now, another important factor of taking a look at the pre-market futures in the evening doesn't mean anything until you get to 10 minutes before the open. Last night, as I was doing the picks, I think the pre-market futures were showing that they were trading up like 140 points. So, well, maybe they just brought it down one day, but then when we got down here this morning, they were down 58 points. So the volume of the futures at night doesn't really mean all that much. Now, right now, they're up another 110 points. So if they do open it positive and close it back up above the T line, now we have a different analysis that maybe we need to see if it's going to be at best a sideways moving market. But we're still kind of looking for that breakout through this level, which would take you up into the recent highs, also giving you the classic pattern of fry pan bottom J hook. Same scenario over here on the NASDAQ. Make these a little bit smaller. If they take the NASDAQ back up, they're still looking for a J hook type pattern. That wave 1 and wave 3 would take you out into new high territory. All right, so with the analysis that right now, again, we have to wake up tomorrow and see strong bullish sentiment. Otherwise, it might be a drifting market where the Dow and the the NASDAQ do come back and test the 50-day moving average before bouncing back up, if it bounces back up. So with an indecisive market, that means you still want to be both long and short. Now, the kicker signal that occurred in HRI on Friday was a good piece of evidence that there should be strength. It backed off. It was up better during the day. However, this still implies a good, strong J-hook pattern. Once again, a high probability trade setup. TDOC, same scenario. J-hook pattern. It tried to trade positive today. Still in that realm of a positive open would give you a good doji sandwich breakout, putting you into wave 3. So these are all situations that allow you to identify which charts have the strongest upside potential. Pause. You can see your doji hammer gap up. And where did it come from? Right off your best friend right off your 50-day moving average. And you can see what the gap up did. It came through the resistance level. This is such a high probability clean chart. I would suspect at least coming back up and testing the trend channel. And this little one, I know some people have gotten in it because I was trading it. Still looking for this to do a J-hook type pattern, getting back up into this open area. Now, one of the things I was trying to point out today in the newsletters is, look what's happening to a lot of our situations where we had buy signals, strong buy signals, good patterns. Home, for example, a good steady uptrend as long as it stays above the T line. LCI, good steady uptrend as long as it stays above the T line. And now back into the realm of being a J-hook pattern breakout with the possibility of a next wave to the upside. SPWR, nice 45 degrees. So what I'm trying to illustrate is if you see something that has good strength to it based upon the pattern, you're still going to be in situations where the likelihood that even though they may not be moving with a great strength, they're still moving even if the overall market is kind of sluggish. So there's about a dozen that we've recommended over the last few weeks that as long as they stay above the T line, there's nothing wrong with them. They just keep moving positive. Snap, and it popped up 45 degrees. So I'm trying to illustrate that this is one of the benefits of candlestick analysis. That as long as you can recognize a pattern and see what it's happening at our T line, this puts you in situations where the probabilities are greatly in your favor that you're going to be in the right direction at the right time. Now on the short side, we recommended Wayfair because of the same scenario that you can see a sell signal. Look at all the indecision right here. Spinning top, hanging man, bearish engulfing, close below the T line, gap down through the 50. They're selling this off. What's the scenario? Wave 1, wave 2, possibly wave 3, at least wave 3, bringing you back down into this area. So this is why we put spread strategy on. Because if this is your likely target with the strength of this selling, a spread is going to produce much bigger percentage return with a lot less price movement to get that return. We had recommended SMAR, but it showed too much strength today. But here's the same situation that you want to know what your patterns or your signals look like. If this opens lower tomorrow and trades lower, you want to be shorting immediately. I'm trying to think of which one it was. Nvidia? No, I'll find it. It was something that, Roku. Yeah, Roku. Bounced up off the 50, and then look what it did the next day. Gap down, back below the open of this day, and went the opposite direction. That was your bearish trend kicker, showing you there's still some more excessive downside. TME was another strong short. Look how it failed right here at the 50. Shooting star. Hanging man Doji. Doji, bearish left-right combo. And notice what it did today. When it traded up, where did it fail? Right smack dab at the T line. Now that's important, once again, because nobody has the T line on their chart. So it's not like it came up to the T line with the expectation of a failure there or to do something there. Nobody has that on their charts. So that was that natural resistance level. So this, if you didn't short it today, you're ready to short it tomorrow because you can see where the trend is going and you can see where it keeps failing. That means everybody's watching to see what's happening at that level. We can see more distinctly, but there's sell signals at those levels. Where's the next likely target? Right down in this trend trajectory. Whoops, Daku was another one. That nice 45 degree ever since our big gap up. And then there was kind of our bullish flutter kicker. Gap up, Doji, moving positive. Implication was that we're going to have more upside. Got where I went to. That's just cool. PRKS, still in a 45 degree as long as it stays above the T line, which it barely did today. Marna, bearish left-right combo, having trouble getting through this level. So on a day like today, if I was long, that would have been a good day to probably close out half the position. If it opens lower tomorrow, definitely close out the position. That bearish left-right combo is a very clear indication that you probably have a change of investor sentiment. That's what created our short here on SPB. I've jumped ahead of myself. Let me go back up here. Fry pan bottom, you can still watch this one. If it starts trading positive, especially if it breaks out into this area, got lots of room to the upside. That's this for CHMA. Now, Radius was an excellent looking chart with the prospects of a fry pan bottom with the dimple, J-hook pattern, but what is the most important criteria of an expected price move? What it's actually doing. So the fact that they close this back below the T-line immediately or pretty clearly indicated that this J-hook pattern was not in progress. Should have closed out the position today. So I'm pointing this out because I guess one of the elements of successful trading is not only finding the good positions and staying with them, but seeing the positions that should be good, but don't confirm, close them out, because there's going to be plenty more that you want to move your money to and take advantage. VIPs, for example, same scenario. What's our criteria for wave 3? About the same magnitude as wave 1. How long do we hold it? Until we see a sell signal and a close below the T-line. If you just live on those simple rules, you're going to be so far ahead as far as compounding your returns. And it takes the emotions out of your trading. You're just doing what the probabilities tell you to do. That's what we did this one with J-hook. NVAX was also had potential coming off of this level right here. Bullish engulfing, popped up, didn't do quite a sell signal, wasn't quite a dark cloud, which meant it should have held at the T-line and started back up. With it closing back below the T-line today, it should have been closed out. Because now the probabilities have gone against us. Where does wave 3? Doesn't matter. If this is wave 1, wave 3 is starting. So whether you want to consider it from here or here, doesn't really matter. Just this move and this move are going to be approximately the same. So when I say approximately, when you got up here and you could see, well, this move right here is about the same as this move. What do we have? Hanging Man, Shooting Star Doji, Hanging Man. They're staying above the T-line, so maybe it's a J-hook, but that told you right there that the J-hook disappeared. So you don't have to be exacting on it. It's just that you're starting wave 3. This wave right here should be approximately this wave right here. Let's see. Okay, some more GM. Notice how it started to fail up here and then gap down. Notice what it hasn't been able to do. It hasn't been able to get back up above the T-line. Was this a bullish day? Man, that was just an up day from where it opened. There's still nothing yet to tell us that this is reversing. However, if you're short and it does open positive and trade positive, it's probably telling you they're probably trying to bounce back up to the T-line, which tomorrow may be at the 200. If it does that, what's that tell us about our strength to the downside? Probably not there. You might want to move on to something else. Okay, so we did SPB, which has been a very good short. Now it's done kind of a piercing signal in the oversold area. Very simple. If this opens positive tomorrow, we'll probably take our profits. Why? We're in the oversold area. We've done a piercing signal. And what's our next criteria? Look how far away we've moved from the T line. So even if it bounces, we want to take our profits and go on to something else. TLNT, kind of the same scenario. Kind of almost a bullish engulfing signal today in the oversold area. If this opens positive, we'll close it out, take profit. Losing a spot here. AAWW. So, not quite in the oversold area, but what other suspicions are we getting with the indecision right here? Look where it's trying to base, where it based before. So that tells me if this opens positive tomorrow, this is probably a strong support level. I want to cover that short position. Macy's didn't do much today. Just an up day and a downtrend. I'd probably have a sell or cover my position if it came back up through this level. That tells me that at least they're probably bouncing back up to the T-line area. So we're still short this one, not with a big position. But again, there's your doji gap down. Look what happened right here. Had a hammer doji. The stochastics rolling over with a gap down. Made it very simple. If this was a support level, which way would they have gone on this day? Back up. The fact that they didn't hold the 50 told us they were heading for a lower level. I don't know what that was. So how long do we hold on to this short? Until we see a buy signal. So we're looking for things that tell us what the probabilities are. For example, look at the Morningstar signal that formed right here at kind of this resistance level as well as the 50, closing back below the T-line on Facebook. What type of pattern is this setting up? There's your blue ice failure. If this starts trading lower, especially comes down through this level, where do you think the next target's going to be? Probably at least down here. And probably if it did that over the next week or two, that's going to correlate with the next target, which is your 200-day moving average. So Facebook is something you can get ready to go short. BABA was a good long position, but it did the same thing today. It was being bought because of this wedge pattern breakout. But then when it came back in below the T-line, back below this breakout level, what's that tell us about the breakout level? It's not breaking out. Close out the position. Maybe even get ready to go short. First target, second target. And a lot of them are moving sideways. Micron. Nothing there that you can put your teeth into. Apple. Same scenario. No real great direction. Amazon. Can't really tell what this is doing. It may be supporting here off the 200, but not a real good aggressive chart. And Tesla. Which way is this going? Hard to say. So when you can look at the SP, didn't we just do that? Oh, the three waves. If this started breaking up through here, this would be wave 1, this would be wave 2, this would probably be wave 3. What other ones did we do? EDOC, wave 1, wave 2. What do we know about wave 3 of a J-hook pattern? Oh, okay. Sound issues. All right. We know that this wave right here is probably going to be the same magnitude as this wave right here. So a lot of people ask, well, are you using Elliott wave? And the answer is no. Because if I'm buying this based upon wave 3, when it hits the top up here, I'm not looking for it to do wave 4, wave 5, ABC retracement. I'm just trading this one based upon what I can see right now as far as the next price move. You do NVIDIA. NVIDIA, bullish Harami. Don't really know. If you were short, you stay short on this one. We did Tesla, we did Apple, Netflix. Netflix, at least we can see what this one is doing. Look at your slow curve, and then where did they break down? They gapped down through the support level. So Netflix, if this opens lower tomorrow, still a good short because you got a bearish doji sandwich in progress. Labu, as far as indicating what's going on in the biotechs, notice where it failed, right here at the 50. Notice where it closed today, back below the T line. Where do you think your next target's going to be? There's your first target, and there's probably your second target. And Nugget showed the gold stocks were acting better today. You can see our little doji gap up, close above the T line, likely target back up into that range, which means your gold stocks, which we'll get to here in a little bit. So there's still a lot of good patterns setting up out there. Now this is a $2 stock. I think Trader Aid pointed this one out. Look at your fry pan bottom. Look at your J-hook pattern. You can still be buying this one because of this whole pattern. What do we expect coming out of a fry pan bottom? A strong price move. What do we expect coming out of a fry pan bottom? A strong price move. What's the prerequisite for a J-hook pattern? A strong price move, and then consolidation, holding at the T line. This one still has got a good upside potential. When you buy puts, or when you recommend shorts, should you buy in the money or a few weeks out, or depends on the price of the put? John, no, that's the risk tolerance of each individual. Let's say I'm going to buy, let's use Wayfair. Depends on how aggressive you want to be. Now, from this chart pattern, where do we expect this to move to? Probably within the next week or two. So maybe you go out to the October 4 weeklies, meaning they expire the October 4. Or if you want to be a little bit more conservative, maybe you go out to the October monthlies, which I think expire on the 18th, 4 weeks out. So it all depends on your risk tolerance. Now, obviously, you're going to get a little bit better leverage the closer they are, because they're going to be less pricey. Now, the next criteria is, which puts do you buy? I don't know if they've got one. I don't think they had the 117.50s. Oh, on some of them, they've got 21s, 20, or 120, 119. So you can pick out any one of those. Or if you want to be a little bit more aggressive, if you think this is the target, maybe you buy a 3 weeks out, a 115, 110 put spread. So I can't recommend which ones you pick, John. That's going to be up to each individual. So when I look at this for myself, and I think I'm fairly aggressive, I might say, all right, I'm going to pick the ones that expire 2 weeks out. And I think one of the recommendations we did was to buy the 121 puts and sell the 116s. and I think at that time it was $1.85 from up here, and I think they closed at like 255. But you get much better leverage doing a spread, or sometimes if you think it could be a big price move, you do a spread and you buy some puts outright. You make good money on the spread, and if it keeps right on going, you're going to be locked into those profits on the spread, but the ones you bought outright might be big moves. And what that also does is, let's say it only moves down here. Well, you've probably made some good money on the spread, may not have made a whole lot of money on the put itself, or you just broke even, but it kind of gives you some padding. Yes, and Bill, I don't know why that happens. Because usually the volume for the options are usually much bigger on the monthlies than they are the weeklies. Okay, where was I? So this one, because of the setup, this is probably going to be recommended for tomorrow, with the idea that you're going to probably be heading back up into maybe the $21, $22 area. So if I was doing, look at what this is doing. What do you call this pattern right here? Anybody? There you go. Thank you, Jay. Yep, J hook, but more precise. Yep, you're all right. All right. So you got a J hook pattern. More precise, it's a bobble breakout because they came up, hit the resistance, pulled back to the T line. There's your Morningstar signal. There's your breakout, like a J hook pattern, but right at a observable resistance level. So it's a bobble breakout. And on top of that, it's part of your classic pattern. There's your fry pan bottom J hook. So if you were going to buy calls, I'm getting way off track here, but a lot of people ask this. If I can factor that this move to this move was 25 points, let's say I just kind of calculate that from here up 25 points is, I'm going to use 160, 185. Now I've got different strategies that I can use. I might buy the calls for 4 weeks out, giving me 4 weeks to get up to 185. But I might buy a call spread, and I'm just going to pick out one. Let's say a 165, 170. And let's say hypothetically, I don't know that, I'm just going to pick out a number. Let's say they're $1.25. Well, if we just go up to 170, that $1.25 turns into $5. If we bought the 162 calls for, let's say, $5, now they're at $8, a decent profit. But let's say it quits right about in here and starts backing off. Well, more than likely, the profits that we have from the spread, if we paid $5 for the calls and it starts backing off to where they're at 460, more than likely the spread has made enough profit to offset that little loss. So it kind of acts like a very good padding strategy, that the price doesn't have to go all the way up here. That would be your maximum profit. But sometimes, okay, 165.70 for $1.60. So that to me fits in the realm of anything over $2 or under $2 to have it go to a maximum of $5 fits my criteria. So if we paid $1.60 for those, and let's say it went to 168, and I don't know what calls we would have bought here. Let's see. Let's say the 160s. Let's say that we paid $5 and it kind of went to $8, not huge profit. But then the 165, 170s, if it came up into, let's say, the 168, maybe that now goes to 320 or 340. So you got a decent profit on the spreads. and which kind of acts, yeah, there you go, kind of an insurance policy. But then the maximum you're going to make, even if it goes to 200, is going to be the 160 goes to $5 because anything after that is going to max out at $5. But if it goes big, you still have the open calls or the outright calls making some big money. So there's very simple strategies that you can use with a combination of a call and a call spread that dramatically improve the probabilities of making good money off of that trade. Especially when we can identify what type of pattern setups, like ARDX, I could be heading back up here. Usually pay less than a third as wide as the spread. So you can think. Jay, I use a minimum parameter that if I'm going to put, if my maximum is $5 total on that spread, I don't want to pay any more than $2 because that's different. Though some people say, well, don't you even want to double your money? You got to remember, you've got some things going against you when you're buying options. First of all, the bid-ask spread. Secondly, a premium on the price move. So not only do you have to be correct in the direction of the price move, but you also have to be correct in the magnitude of that move. And then your commissions, even though they're not very big, are still going to be a little bigger percentage than your just buying stock outright. Now where am I? ITW. That's a belt hold. That's what you want to keep an eye on. That belt hold is usually an indication that they've wiped out a lot of sellers and gives you a good running room to the upside. J-hook pattern. Wave 1, kind of wave 2, going into wave 3 off a Morningstar signal off your 200. So the more pieces of evidence that I can identify, the higher the probability that I can see the bulls taking control. AG, one of your silver stocks, another one that's probably coming back up to your trend trajectory. NG, Navigold, another one that has the prospect of coming back up to the trajectory. And Wheaton, same scenario. So as long as you can see where the support was, you can see how Wheaton and PAS, both have the same support right there at the 50. PBF, there's your classic. Fry pan bottom, J-hook pattern, bobble breakout. Where do you think your next likely target will be? Probably up here. Big lots. There's your bobble breakout. Where do you think your next, you're showing a bobble breakout right here at the 50. If they've breached the 50, now what's everybody watching? See where your next target is. We know that's pretty powerful because you now have a bobble breakout. You can be buying this on the basis that there's your first target. So even if it fails at that level, you've got a little bit of a profit. If it goes through that level, you know they're heading for that target. Goodyear, same scenario. Kind of your classic. They break out through this level, where do you think it's going? Right up to the 200. Olin, same scenario. Look at your left-right combo. Smack dab off the 50. You've got a doji, an inverted hammer, a doji, bullish left-right combo. You can buy this one on Positive Trading. Again, with wave 1, wave 2, wave 3, the same as wave 1. Makes that a very likely target. I don't know why I have that one. Oh, because that's not the right one. GME. GameStop. You can see the fry pan bottom. You can see the J-hook. And observe the obvious. Where was the low of that doji? Right smack dab off the 50. Starting back up. If it comes out through there, what do you got going? There's your J-hook pattern taking you up a lot higher. So still lots of good looking charts. PVG, where's that one going? Back up to the trend channel. NCMI. Wave 1, wave 2, Morningstar signal, broke out. Another one that's got a lot of upside potential. SYNA. If it breaks out, what's your next likely target? 30 to 39, 9 points, takes you up into about the $46, $47 range. Now, will they get there? That's the projected target. So if you're going to buy something, you want to at least have something where you can project what the target is going to be. And if it's going to be a move, it's only going to make 4%, move someplace else. If it's a move that's going to make you 24%, yeah, that becomes viable. Now at least you have a roadmap to say, well, if this is my wave 1, this is wave 2, we've got kind of a kicker signal ready to break out. If wave 3 breaks out, I know I've got, whatever that is, 11 points to the upside. That takes me up into about the $70 range. Now, will it get there? That's where we have the benefit of seeing when it gets up further, whether it's staying above the T-line and or if it's doing a severe sell signal telling us that's when it's time to get out. MIO came up through the 50. Remember what our normal investment patterns are. If they break through a resistance level, what do they usually do? They come back and test it as support. If it shows like it's showing as support, that tells you you've got a strong prospect that when everybody can see that the 50 was not going to act as a resistance anymore, that's when you have a high probability bullish trade setup. BRY, what's this getting ready for? Anybody? Bobble breakout. There you go. And what's the magnitude of your next move? Well, if this was a 3-point move, look for it to go to 13.5, 14. CNO, same scenario. And how did it get there? Kind of with a left-right combo, inverted hammer. If this opens positive, what do you got going on? Probably heading up toward the $19 range. And wow, left-right combo, off the T-line, back up through the 50. Where do you think your next target is? Up in this range with a high degree of probability. Now, on the other side, you still want to have some safety. Look at what's happening here. A failure at the 50 on Dropbox. Where's the next likely target? Oops. Right at the support level. Is that worthwhile? Well, that's 3.5 points on a $20 stock. So that's, I can figure that out. 7, no, 10, 15, 18%. Then if it breaks this level, what do you got going? Wave 1, wave 2, wave 3. Papa John's, where's the next likely target when it's failed the T-line? What do you got here? Dark cloud, close below the T-line. You can buy puts or short this one. Who wrote this? CNGX, Evening Star Signal. Where did this fail? See the tails to the upside, telling you they're having a hard time taking this up any further. Where do you think the next target's going to be? Right down here. What's this one telling us? We've had a doji with stochastics heading down. After a little shooting star gap down, this opens lower. What do you got going on? A bearish doji sandwich, making this your first target, making this your second target. Again, this is just analysis of what type of patterns we can recognize based upon human nature. Ralph Lauren, if this opens lower, what do you got going on? A bearish doji sandwich. Where do you think the first target's going to be? Like fill in the gap, and then your second target down here, third target, wave 1, wave 3 down here someplace. Oh. Whose handwriting is this? I have no idea what that symbol is. It's apparently not that. Oh, for crying out loud. All right, I better go on to the next one. We could be here all night looking at that. That's failure at the 50. Sorry, at the 200. What opens lower? What do we got going on? A bearish doji sandwich after failing here, heading down toward the 50. And CTRA, if this opens lower, observe the obvious. Which direction is this price trend moving? That's your first clue. It's heading down. Came up, hit the 50, and failed. Where do you think it's heading? Right back down into this trend. If it opens lower tonight, I was reading Jeremiah. If it opens lower, what do you got going on? Again, your bearish doji sandwich. After failing the 50, here's your first target down here. When did you run your scan for these stocks? Oh, right after the close. Usually when the market closes, I go take a break, then come back and run some very simple scans. Now, because I know what I'm looking for, this is why I keep reiterating when you see resistance signals, I don't have to go and say, all right, I'm going to find all the Morningstar signals because I can recognize that as a Morningstar signal. I don't have to do evening star signals because when I do a very quick scan on which stocks had the biggest percent move down today, I can see that was an evening star signal that you probably want to get ready to short this one on weakness. So if this Facebook comes down through this level, there's my next target. All right, so it's still a process of if you've got 10 positions on and 6 of them are in nice steady eddies, you don't really have to pay attention to them. You only have one analytical factor to consider. As long as they stay above the T line, you just stay long. The ones that get a little bit iffy, the ones that you may have been in, and then they close back below the T line. So if I was long this one, no concern, no concern, no concern. Oops, there's my concern. I close it out. Now, can I buy this one back? Probably can. But more than likely, if I close this one out, I've got someplace better to put it that gives me much higher probabilities of being in the right place at the right time. Okay, so with that, are there any general questions on candlesticks? Do you do any teaching? Oh, yeah. Boy, I come in, I usually come in there, usually before I come into the main room, and then I'll come in before I come into the main room before the close. And if I see something that is working, like for today, last night we put out a recommendation on the spreads on Wayfair. And the reason for that, it was that buying each one of the available puts was too expensive, so it was probably more beneficial to do the spread. So once it was moving, and we looked at it in the options room, I went back and did some more evaluation and then rewrote it and put that information in the options room. So the options room has obviously a different terminology going on in there, and that's why we separated the rooms so that people that were trying to learn how to utilize candlesticks for stock trading wasn't listening to everybody talking about spreads and things they may not be familiar with. So yes, we do a lot of teaching in the options room. Plus, the benefit of the options room is that you've got some very good traders in there. And they are willing to put out their knowledge and saying, all right, buying this or that based upon the signal. And it's not so that you have a supply of picks, which you do if you get comfortable with whoever is recommending them. But it gives you the opportunity to say, all right, this person's buying puts or calls. Let me go look at the chart and understand why they're buying puts and calls and why they're buying way out of the money or a spread or an in the money. You understand the different philosophies. So not everybody's going to have the same criteria for what they do with options. Some people are going to be more conservative. Some people are going to go way out on a limb and do way out of the money calls or call spreads. So it's up to each individual's risk reward. Okay, I guess with that, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. Dova, big move. And I forgot, make sure your volume's all right on this, but I would be a buyer of this on this breakout. How can we have stayed in recent to have realized today you couldn't? There was nothing there to realize the gain, but you're not trying to figure out when you could have a big gain like this. I mean, you can't say, how would I have known that? You won't. What you do want to know is, what do I do with it afterwards? Is this a good place to be buying? And HTLD, nothing there. If you're short, you stay short. Look at your bearish left-right combo. They couldn't get up through the T line today. And ITRI, if you are long, remember your criteria. You stay long until you see a sell signal and a close below the T line. The stochastic's starting to roll over. If this opened lower tomorrow, I'd probably start closing out the position. ALSN, big bullish engulfing after an inverted hammer. Probably wouldn't go after it until it breaks out, but you can see the J-hook pattern starting to set up. Ballard, that one, the same scenario. J-hook pattern. I'd be, if you're buying, you want to make sure it gets through this level, or more safe is to buy it if it comes up through that level. Frac is not coming up. IAG, that one you can stay long. You want to see it get through this level. Ron, no, I wouldn't. Remember, your stochastics aren't in the overbought area. You've had a strong signals, bounced off the 200. You just stay long until you see a sell signal. And Lulu, nothing great on this chart. Even though you had an up day, it wasn't a reversal signal. If I had my druthers, I'd be trading someplace else. JP Morgan, another one that if you were long, it had to stay above the T line, which it did. But now you still need to see this open positive. If this opens lower and starts trading lower, that means they've topped out. You want to close out the position. And CTL, bullish engulfing. If you close this one out, get ready to buy back this J-hook on positive trading from here. Costco. If you're short, you just stay short. You're bearish engulfing, you're bearish doji sandwich. I would suspect with stochastic still heading down, they're coming back to test the 50. Valero, another J-hook prospect. Be ready to buy this one on positive trading. AAOI, nothing fantastic yet. You need to see something very bullish. Now you can see they haven't been able to close it below the T line. However, I'd still want to see them trading positive going into wave 3. If they open it and trade it lower, that means you're still stuck here. I wouldn't, if I was in it, I'd close it out and wait for the next buy signal. HIIQ, you stay long, but you're in the overbought area with a little shooting star. I'd put a safety stop at yesterday's open or just below today's low, because if it comes back through that level, that's pretty much telling us that this area right in here, more right in here, is looking for profit taking you back to the, I can do actual silver, back to the T-line. Silver traded up strong today, which meant your silver trust was up strong today. This one, oh boy. Yeah, you can be buying this one as long as it stays above the 200 as well as the T-line. Hecla, wouldn't be buying it because if you were long, you stay long. I wouldn't be buying it until it comes back up through the high, telling us that they went through the resistance levels, which was also coinciding with the 200-day moving average. Workday. If you're long, you stay long. If you're thinking of buying, I'd rather buy it as it breaks out through this level. You do have the big bullish engulfing. big bullish engulfing. So this is the area they were buying, but you need to see it break out pretty soon. The stocks, nothing to get real excited about right now. If you were out of it, with it trading below the T-line, remember, they still need to get back up above the T-line to indicate a bullish trend. Right now, it's not there. And Coop, you can stay long on this, but you can see what you got. You don't really even have a fry pan bottom. It wouldn't be one of the best looking charts. CME. Oh, I did that earlier by mistake. Nothing great. Just a very slow uptrend. I don't know what you're doing with MM King. This or Colgate. Nothing wildly exciting. That's kind of your quintessential institutional trader. I would suspect it's probably trying to head back up into this area. I'd watch to see what it does here, but again, your percentage move isn't all that great. Now, if you were looking for crude oil, well, what's crude oil? Still kind of junky in here. Not really going anywhere, but not backing off. And U.S. Steel, not really any great chart here either. Boy, I probably wouldn't be long or short this one. Just nothing to grab onto. ATVI. If this opens lower, there's this little gap to fill, almost did. There's this gap to fill, and there's this gap to fill, which makes your 50-day moving average a viable target. DRRX, big shooting star. If you're long, it has to open positive and trade positive. I'd put a sell stop right here. If they open it lower and start trading it down, they're at least coming back to test the T-line area. All right. What's your, whoops, ICHI. A big hammer signal. You can buy this one on positive trading because this acts something like a belt hold that they've taken out a lot of sellers. I don't know what the volume was today. But if this starts trading positive, you can see that this is the action. Stopped out today, but belt hold suggests buy back on positive trading. Yes, you can buy back. Boeing, another one that's kind of an evening star signal. If it opens lower, very doji sandwich, bringing you back down to the 200 anyways. BFC, bullish engulfing. Not a great looking chart, but if it starts trading positive, your J-hook pattern starts going into effect. MNK. Boy, you can start buying this one too, but remember, you got to break this downtrending channel. So even though it's a potential buy, oops, it went the opposite direction. Is that? I'm partially colorblind. Yep. Nah, I'd be out of this one. There's nothing there. MNKG. That's got the potential of a bobble breakout type pattern. Again, notice your shooting star. That would have been my stop, closing out that position. Okay. Right now, I haven't looked. I can look. It's telling us that the pre-market futures are up 100, but that doesn't mean anything now. It's what we're looking at first thing in the morning. If this opens lower, the market opens lower, this really isn't a nothing day. It's just a bounce, and notice where it bounced to, right back up to the T-line. Suspicion should still be that they're bringing it back to the 50. Okay, everybody, have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.